Woof! It is Snowball, and this is your company filings and earnings briefing for Wednesday, July 8th. Big day at the office, humans. 3 companies beat their numbers today, and the stock market still bit 2 of them right on the tail. Plus, oil jumped, the Federal Reserve got grumpy, and one little company nailed its earnings so cleanly, the options market called it almost to the decimal. Let us dig in. First, the weather outside, and it was messy. A ceasefire framework between the United States and Iran fell apart. Ships got attacked near the Strait of Hormuz, and crude oil jumped about 5% to over $74 a barrel. That dragged the Dow Jones Industrial Average down 1.1% to 52,348. The S&P 500 slipped 0.25% to 7482, but the Nasdaq clawed back late to finish up 0.2 at 25,870. And the Federal Reserve released the minutes from its June meeting. The big takeaway? The committee dropped its easing bias entirely, and 9 of 18 officials now pencil in at least 1 interest rate hike this year. That is hawkish. The fear gauge, the VIX, ticked up near 17. Story 1, and it is the main event, Levi Strauss. The blue jeans maker reported after the close, and on paper it was gorgeous. Revenue of $1.56 billion, up 8%. Adjusted earnings of 28 cents a share, beating the 24 cents Wall Street wanted, and up 27% from last year. Their direct-to-consumer business, the stores and the website, grew 11% and is now more than half of all sales. Then Levi did the thing every investor loves. It raised its full-year forecast, and it hiked its dividend 14%. Beat, raise, and a bigger payout. So the stock went up, right? Nope. Shares fell almost 6% after hours. The catch is tariffs. That rosy guidance assumes China tariffs stay at 30%, and after an 85% run over 3 years, the market wanted more. Sometimes a great quarter still gets you a cold nose. Story 2, Helen of Troy. You know their brands, OXO, Hydro Flask, Vicks. They reported before the open, and they also beat. Revenue of $402 million, up 8%, and adjusted earnings of 17 cents when Wall Street basically expected 0. They even raised their sales outlook for the year. The stock popped early to $28 and then completely fell apart, closing down 10.2% at $25.18. Why? 2 reasons. They only maintained their profit forecast instead of raising it, and their gross margin shrank on, you guessed it, tariffs. Now here is the fun part for us number sniffers. Before the report, the options market was pricing a swing of about 19%. The stock moved 10, so it was a big, ugly day, but it actually landed inside what the options had braced for. The bark was bigger than the bite. Story 3, and this one is my good boy of the day, AZZ. Never heard of it? It is a metal coatings company. They galvanize steel so it does not rust. Boring? Maybe. Beautiful? Absolutely. AZZ posted record quarterly sales of $448 million, beat on earnings with $1.85 a share, raised its full-year guidance across the board, and hiked its dividend 20%. The stock jumped about 8% after hours. And here is the magic. The options market had priced a move of about 8.6%. The stock moved 8.3%. That, my friends, is the market calling its shot and hitting it. When the surprise matches the price, everybody sleeps well. Now the part you came for, what my nose is pointed at next. The options market is already pricing the next round. PepsiCo reports before the bell tomorrow, and options see about a 3.3% move. WD-40, yes, the spray in your garage, reports after the close, with a bigger bracket running to mid-July. Then Friday, Delta Airlines opens the airlines, with options pricing about a 6% swing. After that, the big banks kick off next week, and Tesla lands on the 22nd. A full bowl coming up. So today's lesson, beating the number is not enough anymore. The market wants the guidance and the margins too, and tariffs are the splinter in everybody's paw. AZZ nailed it. Levi and Helen of Troy got nipped, and the options market kept excellent score. Come back tomorrow for PepsiCo and Delta. Hit subscribe so this dog can keep fetching your filings. I love you!